CEO and CIO of ARK Invest, OpenAI is now the third largest position in the ARK Venture Fund. Kathy, it's great to have you on. Welcome.
Thank you, Morgan. Happy to be here. Happy to see you.
So I want to start right there because this was a record fundraising round. We know there was a lot attached to this fundraising round, including a promise of a conversion to a for-profit entity. Why did you feel it was compelling to invest now and at this valuation?
Well, we've been doing work on AI for 10 years, and we've been waiting for the companies that were really that NVIDIA was going to hand the baton to. Not that NVIDIA's story is over at all, but as you know, NVIDIA has basically been communicating, and investors have been buying a very big idea. And for NVIDIA to continue to work, we think there are going to be other winners. We think that the foundation model players are going to be very big winners, $15 to $20 trillion in market cap in the next 5 to 10 years. We put out a piece in our Sunday newsletter you can find on ark-invest.com, and we're going to put out a lot more on this. So OpenAI leading the charge, really, Anthropic, XAI, so Elon Musk and team, and even Elon, I think, is saying those three, and Google with Gemini are the big four. And, you know, unlike the railroad era, and many people are comparing this to the railroad era, I think that the four winners are showing themselves very quickly. Whereas in the railroad era, which, by the way, accounted for 63% of the stock market in its heyday in the early 1900s. Unlike the railroads, there were hundreds. I think there were hundreds. We can focus on the big winners. This space is moving so quickly and is going to become so big because it's effectively substituting software for labor. Not that this is going to kill jobs at all. It's going to make people much more productive. And they're already seeing it with ChatGPT just as a starter.
Consider how the 2006 release of NVIDIA's GeForce 8800 processor altered the gaming scene. Almost 2 decades later, NVIDIA is still progressing in that direction with their Blackwell, which is aimed at revolutionizing the artificial intelligence space. Demand is insane, as Jensen Huang, the CEO of NVIDIA, recently stated. To serve high-performance AI workloads, major cloud providers such as AWS, Azure, and Google Cloud are incorporating Blackwell into their architecture. Another indication of the critical demand for sophisticated AI processing power came from Oracle's announcement on October 2 that it would require 131,072 NVIDIA Blackwell GPUs as part of a $6.5 billion investment to create a new public cloud region in Malaysia. NVIDIA introduced Blackwell, a platform that enables businesses to use generative AI in real time on models with billions of parameters, in March. To comprehend and produce responses in human language, these massive language models undergo rigorous training on big data sets. Huang stated, Blackwell is in full production during a CNBC interview. Blackwell is in incredible demand. Everyone aspires to be first and to own the greatest amount. Analysts at Bernstein predict that hyperscaler purchasers such as Amazon, Microsoft, and Alphabet would invest approximately $160 billion on AI infrastructure by 2024. It is anticipated that Blackwell will cost between $30,000 and $40,000 per unit. Huang underlined the significance of NVIDIA's AI infrastructure receiving yearly platform releases in addition to ongoing improvements. Huang went on, if we can improve the performance, we're essentially raising the income or throughput for our clients on these infrastructures by a couple to 3 times per year, like we've done for Hopper and Blackwell. NVIDIA's dominant position in the AI business is further reinforced by its most recent earnings report. The business reported earnings per share of 68 cents on August 28, exceeding the 64-cent estimate of Wall Street. Revenue exceeded expectations and reached $30.04 billion, up 122% from $28.7 billion. For the current quarter, NVIDIA anticipates $32.5 billion in sales, an 80% increase over the same period last year. In Q4 of this year, NVIDIA intends to begin shipping Blackwell GPUs to customers. A consumer release is scheduled for 2025. We anticipate shipping several $billion in Blackwell revenue in the fourth quarter. NVIDIA Chief Financial Officer Colette Kress stated on the company's August earnings call. This year, NVIDIA's stock has risen by more than 150% after a remarkable 240% gain in 2023. With a current market valuation of nearly $3 trillion, the corporation ranks among the most valuable in the world, only surpassed by Apple and Microsoft. J.P. Morgan says it is still bullish on NVIDIA's prospects and has maintained an overweight rating and a $155 price objective. Investors don't need to pay too much attention to the recent sell-side noise on rack-scale portfolio changes. In a research report dated October 2, the analyst states that NVIDIA remains on schedule to deliver its next-generation Blackwell GPU platform in large volume manufacturing by the end of Q4. Development of NVIDIA's dual-rack 72-way GB200-based NVL36X2 has been put on hold, according to Ming-Chi Kuo, analyst at TF International Securities, as of October 1. Bank of America reaffirmed its buy rating and $165 price target on NVIDIA last month. The company refers to this company as its top sector pick. The company emphasizes NVIDIA's compelling growth and claims that Blackwell product shipments will be confirmed in the following weeks through supply chain updates, which they view as the primary driver of a rebound. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
Where's the opportunity in chips across NVIDIA, which has already been huge? Then you got AMD and you got Intel, which hasn't been doing so well.
Well, you're talking about two of my favorite names right there, NVIDIA and AMD. NVIDIA just sounds like it's great. I mean, you know, congrats to you to have that great interview the other night with him saying the word insane. I loved that. That sort of tells you what you need to know. Our checks on Blackwell are great, and everybody wants it. That should drive some significant sequential growth in January and then again in April. And then we think the gross margin starts to improve quite a bit on the back of Blackwell after a quarter or two, and that'll get the stock going again. So, you know, we feel pretty good there. We know some folks have voiced some concerns on your network as well, but we're seeing, you know, really good demand. And remember, OpenAI just launched a bunch of stuff, and we're not even inferencing with that stuff yet. And Apple, you know, is getting out Apple Intelligence, which hopefully drives some of the OpenAI. So we feel good there. And on AMD, they got a big event next week. We don't think they're bringing us out there, you know, to lay an egg. And we think that last year on that event, it really popped. And, you know, there is room for number two there. So we feel good about AMD as well.
Speaking of Jensen Huang, here he is with us just a couple days ago.
This is the beginning of a new wave called enterprise AI. And then after that, as we're entering into enterprise AI, we'll simultaneously developing, cultivating the wave after that, which is industrial AI.
So we've got industrial AI that Jensen is talking about. We've also got Apple Intelligence and perhaps an application-driven consumer AI wave. Which is more investable?
Well, I think it's all investable. I think a lot of stuff gets started in consumer, and then it creates actually a lot of interest in the enterprise. And just like what happened when we had the Chat GPT mania, then a bunch of enterprises woke up to it. I think as as consumers start using visual intelligence from Apple as well as from Google, their version of that, and those kind of things where you're seeing things with your phone and then asking questions about it, that's going to drive a lot more awareness of AI in general. And I think in enterprise, you're going to start seeing many enterprises want to work with small language models so they can cater it to their industries. And then you're going to also see more adoption of the NVIDIA NIMs architecture, which is really going to fuel more enterprise adoption. And we're in the early innings there. We haven't even seen the interest in AI agents, which are autonomous, really pick up. And that's going to be huge. You've been hearing a lot about it from Benioff. I actually think Microsoft's going to drive that more than a SaaS company. We're just in the early innings, John, on so many things. I'm pretty excited.
According to billionaire Ray Dalio, NVIDIA Corporation is ranked number 2 on our list of the 10 finest stocks to purchase. NVIDIA's stellar financial performance and pivotal position in the rapidly expanding artificial intelligence, AI, business are the main drivers of the company's optimistic outlook. NVIDIA Corporation reported $16.6 billion in revenue and $6.5 billion in net profits for the second quarter of 2024, a notable 88% increase over the same period the year before. As more businesses invest in AI technologies, its data center division contributed significantly to this development, earning $11.2 billion, up 138%. The demand for NVIDIA Corporation's graphics processing units, GPUs, particularly for AI applications, is rising as the company has established itself as a leader in AI and machine learning. NVIDIA Corporation has strengthened its position in the tech sector by forming collaborations with key cloud providers to improve their AI capabilities. Recent product releases demonstrate NVIDIA's dedication to innovation, such as the Hopper architecture designed for AI workloads. Furthermore, NVIDIA Corporation's proactive approach to meeting rising demand is demonstrated by its partnerships with top companies to build AI-driven applications and its initiatives to increase manufacturing capacity. With a market value of $810 million, Bridgewater owns 6,556,193 shares of NVIDIA Corporation. According to billionaire Ray Dalio, NVIDIA comes in at number 2 on our list of the finest stocks to purchase overall. Although we are aware of NVIDIA's potential, we are more certain that undervalued AI stocks have a stronger potential to yield larger profits in a shorter amount of time. The incredible increase in NVIDIA's stock value driven by artificial intelligence, AI, means that if you had invested $100 in the firm at the beginning of 2023, you would now own $830. Nevertheless, one expert believes that the stock might rise from its current price of approximately $120 to nearly $800 by 2030. According to Phil Pinero, a former senior advisor at the Boston Consulting Group, the introduction of NVIDIA's next-generation Blackwell processors plus the further development of AI could result in annual revenue rising from $61 billion in fiscal 2024 to $600 billion in 2030. Let's examine the catalysts Pinero outlined and see if they have the strength to support NVIDIA in continuing its incredible growth over the long term. Accelerated computing is going to be a long-term growth engine, Accelerated Computing CEO Jensen Huang stated on his company's August earnings conference call. According to Huang, there might be a 90% reduction in computing costs with the switch from general-purpose computing, which uses central processing units, CPUs, to accelerated computing, which uses graphics processing units, GPUs. According to NVIDIA, accelerated computing is not only quicker thanks to GPU's ability to accelerate demanding workloads in data centers that would have required more time from CPUs, but it is also more environmentally friendly due to its smaller energy footprint. So what does this really mean for NVIDIA's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Reaction, or the expected reaction to NVIDIA's share price today. It's been hitting a wall in terms of a level that investors have been looking for it to break through. Talk to us about what you're paying attention to in terms of levels or analysts' reaction.
So I will say that I know that this has been like the crown jewel of the S&P 500, but I think the cooling has actually presented, so many opportunities, because I know I'm not any chart master here, but you can just look at the chart and see that we've seen now higher lows. We've been still trending to the upside. The 200-day moving average has been as steady as any you can see out there to the upside. So I think, technically speaking, this name is intact. react, and these dips have only been, if anything, buying opportunities. We're still up 140% on the year. I know we've pulled back about 2% this week, but I think that anytime you see these pullbacks in NVIDIA, it's like look no further than the market. It's like one of the most highly correlated names right now to the overall market. So I think that these moments of like mass sell-offs, when you're as big as NVIDIA and as successful as NVIDIA, it seems like it's a head for the hills moment. I think it could always be seen as an opportunity, hey, a way to buy NVIDIA.
Based on its energy efficiency, Huang predicted that $1 trillion worth of data centers in a few years will be all accelerated computing. According to estimates, data centers use between 1% and 2% of the world's energy, a percentage that will double by the end of the decade. Hence, it is anticipated that GPUs' significantly quicker speed than CPUs will contribute to long-term energy usage reduction. Over the next 5 years, the demand for data center accelerators is expected to expand at a compound annual growth rate, CAGR, of 28%. Furthermore, Huang stated that his company may be at the start of a remarkable growth curve due to the enormous end market that the switch to accelerated computing is expected to create. This is a result of NVIDIA's dominance in the data center GPU industry. Even while it loses some of its market share, it still stands to gain significantly from the secular development in accelerated computing, as it supposedly had 98% of this space at the end of the previous year. Looking ahead, NVIDIA reports that demand is tracking ahead of supply for its forthcoming Blackwell AI GPUs, a pattern that should carry over into next year. Given the foregoing discussion of NVIDIA's promising future, it is not surprising that the business has raised its revenue projections for the next 3 fiscal years. NVIDIA's top line is predicted to surpass $207 billion in fiscal 2027, more than tripling its sales from the previous year, as the above graphic illustrates. Most of calendar year 2026 will fall inside the company's fiscal year 2027. Therefore, it will require an annual growth rate of 30% over a 4-year period in order to reach $600 billion in sales by calendar year 2030, NVIDIA's fiscal 2031. NVIDIA might very well reach $600 billion in revenue by 2030 because it caters to a number of rapidly expanding businesses, including cloud gaming, digital twins, and AI processors, which are predicted to increase at an annual rate of 41% through 2032. It is yet unclear, though, if Pinero's projected upside for the stock will materialize from this expansion. In order to achieve 561% returns from this level, the company will need to maintain its current price-to-sales ratio, P/S, of 32, assuming that NVIDIA does hit $600 billion in sales in 2030. In comparison to the present level of just under $3 trillion, that would equate to a market cap of $19.2 trillion. NVIDIA's market cap would increase to $4.8 trillion if we were to assume that it is selling at a P/S of 8, which is in line with the average for the U.S. technology sector, instead of giving it such a rich sales multiple. Thus, if NVIDIA trades at a more fair price, it might see gains of 61% from its current levels. However, there's a significant probability that the company will eventually provide a considerably stronger upside and may even approach Pinero's optimistic forecast if the market chooses to continue rewarding it with a rich multiple due to its robust growth.